All right, good morning, traders. Pre-market analysis for Friday, 3/27. We're looking at the crude oil chart, the same ascending wedge, bull pennant type of pattern. Again, we're going to go through this over and over and over. Same consistent things. And again, be sure that you write that word down, tendencies. See the high-to-high trend line extension here. See the low-to-low trend line extension here. See the impulse leg right here, or the pole of the flagpole, if you will. You see pennants shaped different ways. This is more of an ascending wedge. Typically, we see the horizontal structure support and then a descending high-to-high trend line here. So again, we're either going to break above, break below, not a question of if, just when and which direction. But you can see the consolidation. There's energy building up inside of this. We go symmetrical double top here. We pull back down to a higher low. We go lower high here, and you'll see again a little bit of a left shoulder, head. We break the neckline, come back up, and you see that 618 retracement right there on the right side. So take the fib retracement, left click at the swing high, left click at the swing low. There's the 618 to the cent. Okay, then we come back down. We expect a retest of that swing low, 49.80. We get close at 50. Then we pop back up, lower high holds, and again, consolidation point right there. So on the hourly chart in crude oil, I sold this 51, short right now, stops trailing aggressively, and obviously if we break below, close below, we want to know where's the market likely heading. All right, so let's get rid of this, and now let's do a little fib analysis. We did a retrace, extend, and now potential projection. And that could put us in a nice ratio trade buy signal. Look left right here. This is our impulse leg. That's the swing low that preceded the drive to this new structure high. Now it's going to start to take shape. Now we take our fib extension. I want to measure left click A, left click B, left click A. 127 Fibonacci extension of that leg projects down to our 618 fib retracement. And our 1618 onto our 786, producing two little areas for the bid zone. Obviously, the $49 level right here, key price point, and we're at an even handle. Plus, highs of the day so far for this session, 51.10.11. Remember, right now, crude oil's trading average true range 7-day is 220. So 100% of that average true range would press us down to the $49 handle. All right, let's look right here. Let me get the triangles out. There's XA. Retrace AB. Extend B to C. And now project CD. So there's a big, bad, beautiful ratio trade setting up. All right, now let's also do an inversion here. We measured our A to B leg right here to run that 127 projection. I'm going to invert, left click at C, invert it, left click at B, pull it back up, and you'll note a point of confluence where the 1414 extension of that leg is going to come right into play around that $49 level as well. So we'll let Ninja Trader pop this bad boy up. We'll make that simple modification. But again, great little opportunity to just teach on the use of the fibs. Ratio trade pattern. Remember, we had this big, beautiful setup in 3 markets in the last 3 weeks. All 3 nice winners on our higher time frame.
Order pending.
And there it is. I'll kill this, and then boom. So see the 1414? So that is true, big, bad, solid Fibonacci confluence. I'm going to pull this up right here just to remind us intraday that the 49 to 1 or 49.10 10-cent range is pretty significant. One extension of one leg, one extension of another leg, Fibonacci retracement of another. Beautiful market symmetry. All right, now let's go take a look. I shorted the 6B. I want to take a quick look here at some higher time frame analysis. There's that beautiful sideways trade. Just been smoking it sideways, gang, in this solid sideways market. So look, been smoking it sideways in this solid sideways market. Say that 6 times and see if you can do it. You silly. All right, so there's the swing highs at the 149.80. Again, structure, leaves, clues over and over and over. Just sell resistance. And again, I typically watch for qualified trade signals intraday. 150 tick, 233 tick, whatever my day trading time frame is. But there's our 148 buy right there. Beautiful. Another 100 pips straight north. Not only that, but I want you to note the symmetry. We go oversold, lower high, bullish divergence. From this swing low right here, grab your ruler. From that swing low over to that swing low, you see that it was 16 bars. Okay, so 16 hours between the two tests, less than 1 day. Now, what's happened since that time? We go oversold, lower high, bullish divergence. There's the buy signal at a key price point. We call that an SOS 4 buy. Then we get a pop. From this low, we go to a new structure high. So traders, this is the perfect setup for a potential 2618 buy signal. Okay, so from that swing low, I want you to measure your fibs up to the new structure high. We require the higher close. Then we look for the retracement. Buy limits at 48.38, buy limit at 48.16, and then stops have to go 10 to 20 pips below that swing low. The expectation is, remember, we're always looking for tendencies. And then I want you to think in the thought process of expectancy. If we get the pullback to here and here and the long entry, then anything that I buy here, I'm going to take off as we retest these swing highs. If I get both of them off, my extended target would be that swing high. Come back over here real quickly. If I buy here and my stop's down here, let's say 74, you'll note right here I'm risking 65 pips. Take the B point on the ruler. If I buy there and I cover on a retest of this level, I'm going to reward is going to be 70 pips. So it's a 1-to-1 risk-reward ratio. And then target 2 would be a retest of the 150s, and that produces 140 pips. So risk 65 to make 70, risk 65 to make 140. And again, as usual, if target 1 is attained here, then stops would trail, and we'd reduce the exposure significantly. So 2618, great qualified setup and signal there at the 60-minute time frame. Let's go look at the euro. Yeah, I got to pull the 6B back down as well. Euro right here, I got long right here, profited, got long right here, got stopped out. Now we popped right back into this beautiful structure resistance zone, sold them right there, and I think I just got stopped out on this. So what's happened here, gang? Again, go through the verbiage. If this, then that. We made new structure highs, we pulled back down, took out the 109.10s, traded down to our next key price point right here. We got the pop and the retracement, but after that new structure low was made, look where we ran to. New structure low, 127 relevance, bada bing, bada beautiful. Swing lows come in at 108.10. After we make that new structure low, we anticipate a lower high. Where might that lower high exist? Look left. Right here, we popped up to here. Let me get rid of the fibs or at least move them. There we go. So you'll note right there with the 109.07s, look left, structure. So we had basically a little offer zone right here, 108.70 to 109.08. Now at the 109.08, let's come into our 1,000 tick chart right here. Look at that. Look at the DSR levels, gang. Just crushing it sideways in that British pound. And again, we talked about this yesterday. 3 winners and a loss. So 75% accuracy trading those levels in the sideways market. Euro currency popped back up to that level. We got our cluster 3 sell. RSI is overbought. Popped right here. You can see right there, sold them on a limit order, covered partial here, and then took the balance off at the 0870. So on the 1,000 tick, love this level again, 109.06 to 109.10 for the short entries. Make sure I'm off on at least 2/3 or 1/2 of my position. by the time we hit the 108.70s. And then if we break below, close below, then we're likely to go see 108.20s again. Look at this. Oversold, lower high, bullish divergence. Overbought, higher low, bearish divergence. Just the perfect turning point patterns right there. All right, and then S&P 500 real quickly. We talked yesterday prior to closing our live room down. Sell the highs of the day. We had a DSR level there. If you laid your limit orders out there, not only did you get short, but you participated in a beautiful rollover. So here's the day trader. I left the limit orders out as we closed things down, got short here. Took partial profits there, 51.75. And then balance taken out on a trail stop. But beautiful winner. As we look left right there, we were just selling against, remember, it was our offer zone 1. It was the gap fill, and made sure that stops were at least 20, 60, 50 or higher. So we had our stops above that swing high. So beautiful winning trade right there. All right, so let's get ready to rock and roll here. I'll do some additional updates intraday, and then let's take a look at some stocks, Rod.